Costly mortgage holidays. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because I'd like to have a look at this article from news.com.au discussing, well, how banks are going to hit home buyers with higher interest for claiming hardship. Remember when everyone was praising the banks, or some people actually were, in the media and different organizations, praising the banks for their home loan holidays that have now been pushed out potentially out to March. And I remember reading article after article about professionals who are depending on these holidays to keep them in the house. How close to the edge would you have to be with no buffer, no payments ahead? Because they keep telling us, people have paid years ahead. They're fine. They've got offset accounts. They're all good. But you've got to remember, there's going to be investors that are just taking the loss to get out. There's going to be people that have invested several times, are paying interest only, and can't get any rent. And now they can't sell, particularly if you're in Victoria. So even if, a lot of people, most are fine, it only takes the edge cases to start driving property down. We'll have to see. Because the banks really aren't our friends, everyone. They're just risk managers. Whatever they're doing, you need to think and appreciate the fact they're doing it in their own best interests. It may be smarter to cop a hit right now, get it back later, keep people in their homes, slow down the decline in the value of their assets. So, banks may hit home buyers with higher interest for claiming hardship. So financially distressed home buyers pressing pause on mortgages could be hit with higher interest fees from their bank if they seek further help. Financially distressed mortgage holders, we've already read that, because of the pandemic. Home buyers unable to resume normal repayments beyond the loan deferral deadline at the end of September may be forced to opt into higher interest accruing loan products to avoid the possibility of losing their properties while money is tight. I mean, how long can we kick the can down the road? How long? What else can the government do? They really are changing the goalposts, aren't they, for operating a business and being in the market. You've got the one that gets me. I was talking to a client about it the other day. It's just this trading while insolvent, that it's been extended to December. And his wife is a barrister and said she doesn't understand what's going on. She doesn't know why they're letting this happen. And he's feeling sorry for the insolvency practitioners. They may be running out of work. Banks are offering mortgage holders still feeling the financial pinch of the pandemic the option of moving to interest-only payments. I called it. Remember I was saying that would happen next? That they'll move people to interest-only? Oh boy. And this is it. They're doing everything they can to slow it down. Everything they can to slow it down. What else can they do? Okay, here's the next one. Multi-generational loans. Sign up your child to the house loan today. Pass it on. Extend it out to 100 years. Multi-generational loans. What do you think? You think we can see that? Oh, I hope we won't. But somehow I think we will. That's just serfdom, isn't it? Or probably serfs paid less taxes. Interest-only repayments are cheaper in comparison to loan payments, still paying both principal and interest. It is designed to be a temporary relief measure while consumers are unable to meet loan obligations. And it's the brilliant strategy people use. What they do is they'll buy one property and another and just do them all interest-only, because property always goes up and you can't lose. You can't lose until now. Until we hit the first recession in nearly 3 decades. I mean, they're going to be people really close. If you can't even meet your interest and principal payments, you're too close to the line. Maybe they've got a reserve, an emergency fund, and then they just want to stretch it out a little bit more. Maybe that's the way to do it. But you've got to find ways to save money. You've got to cut costs everywhere you can. I tell you, I'm quite we're in a very fortunate position because we bought a dump. Really? We bought a place that needs a lot of work. A lot of wives wouldn't put up with it. But then we've got a mortgage that doesn't cause any stress. What would you rather? What would you rather? You know, the embarrassing house that is, you know, a labor of love? Or, you know, something nice and pretty that you can show off to keep up with the Joneses? You tell me in the comments. Tell me in the comments, because I know my stress level is not that bad. And I'm slowly getting better at painting. Next thing is I need to learn how to rewire crimp Cat5 cables to wire up the network in the house. Because, yeah. You don't know how much pain I went through yesterday on AussieBroadband getting our internet sorted. I'm still scarred. So the move has sparked concern from Rate City researcher Sally Tyndall, who says banks should not hike interest rates for people who claim financial hardship because of the pandemic. Well, they're not hiking interest rates, Sally. They're offering them a new product. Maybe this is the path. You know, it's the tap on the shoulder. We'll let you go interest only. You need to sell. You need to sell. Maybe this is the option for people who are realizing, okay, we've got no way of riding this out. If it doesn't pick up in a year's time, we're losing the house. We can sell now and still have some equity, or we can sell now and walk away even. Rents are going to be cheaper. Maybe that's the smarter thing to do. If you can. What if you're in that situation in Melbourne and the real estate industry is essentially shut down? Some of these people, through no fault of their own, have had their livelihood stripped from them. She said, that's called life. You know, I don't mean to be harsh, but guys, that's the unintended, you know, disasters happen through no fault of our own. These customers should be getting a rate cut, not a rate hike. Asking people to pay more interest when they're in financial distress doesn't seem fair or reasonable. Life isn't fair, and it isn't reasonable. You've got to deal with it. You've got to take a stoic attitude. This is worrying. I mean, does she really believe this? Is this a paid piece? I think it is. It's just a sponsorship piece for Rate City. But can people really believe that? Or are they just harping on and singing the tune to the poor, destitute Australian? Have we really become such a weak victim nation? Has that happened to Australia now? Is that what we've turned into? Or am I just becoming such an old bitter bastard? Or it's because I got children and toddlers, and when they fight, I have to tell them, you know, guys, life isn't fair. Deal with it. Oh, they got more yogurt than me. Life isn't fair. Or here, I'll show you. Give me your yogurt. I'll eat half. See, that's what the tax man does. They now think the tax man's an evil monster and run away from it. That's good parenting. So, across the major banks, principal and interest variable rates at around 2.7, 2.8, with interest-only repayments sitting at 3.3. She said moving to interest-only rate may be a good short-term measure for those doing it tough, but banks should help customers where possible to minimize interest burdens. Banks are in the business of minimizing risk. They're in the business of minimizing their risk. I mean, this is a fluff piece. The banks have been told by ASIC to be fair and flexible in their negotiations and help people stay in their homes if that's in their best interest, she said. Yes, and we've read through those requirements from ASIC on this channel. And the banks have got a lot of processes in place, but there are going to be some people that just aren't going to make it. This is a recession, okay? This is a recession, everyone. Some people aren't going to make it. Some people have taken on too much debt. Some people have fallen for the line and bought, you know, paid a fortune for a specky, and that's exactly the same as everything else. That's sad. The sad truth, guys. We're going through a recession. Quality of life is going to go down. We're going to toughen it out. But good things can come out of that. It may be sad and tough, but good opportunities arise. Maybe getting all the shit, just, you know, being freed of some of those burdens could be the best thing that happened to someone, and they could find a new path in life. This stepping away from work may be the first time people have actually realized that they hate what they're doing and want to look at something else. There's opportunities. They need genuine help from the banks, not bigger interest bills. According to Rate City Research, a mortgage holder owing $400,000 who chose to move to interest only after the 6-month deferral period would pay an extra $13,000 over the life of a 25-year loan, or they could just pay it off quicker later. You know what? In 6 months, they just, make up that chunk of money, come into something, sell a car. Boom, another 20 grand off it. Okay, that extra interest they paid, oh, look, it only adds up to, a couple of grand. I mean, these are hit pieces. Do people fall for this? The ABA has confirmed a further 4-month deferral may be granted on request. Based on the same loan, a customer owing 400 grand who took the additional 4 months would have to pay an additional $10,000. CBA says customers are informed about the increase in interest payable when they contact the bank to move their loans to interest only. Westpac said it will be looking at further relief on a case-by-case basis, but the actual rate will depend on the selected product, borrowing purpose, and the original loan-to-value ratio. NAB says its rates will be aligned to its interest-only products, and ANZ has been contacted for comment. Now, see, supplied. Interesting. Is this a paid piece by Rate City? I wonder if it is. I mean, shouldn't the NCA Newswire... I should look into that, really. I mean, because remember, this industry, the journalists are requesting, well, pretty much handouts from Google and Facebook, all the online providers. It feels like it, doesn't it? Let me know what you think in the comments. But nevertheless, the talk of interest only, we'll have to see. What do you think, everyone? What do you think? Do you think the banks are being unfair? Or is it naively painting them as good guys and really, pretending not to know what reality is? Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, and Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.